Welcome to the Hamsley Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Wednesday, June 27, 2012. For the market internal, the New York Stock Exchange Advanced Decline Differential closed at 1,452. The Nasdaq Advanced Decline Differential closed at 954. Both of them closing near the highs of the day, which was positive for the market. There were 11 new 52-week highs for the S&P 500 and 1 new 52-week low for the S&P 500. For the volatility, the total contract rate today was 167,000 and 18.9 million in total premiums paid. Both of these were very light in volume as we have seen in the past. The dollar-weighted put-call ratio for July was 0.83 with 60% of the total premiums paid. For August was 0.4 with 20% of the total premiums paid. Again, pretty neutral readings here, but volume was pretty light overall today, so that's what we have here on the dollar-weighted put-call ratio. Here we have the daily chart for SPX. We had an update today, good day, up almost a percent. Confirmation after what yesterday we closed at the 0 sig line. We were mentioning yesterday that we wanted some confirmation either to the upside breaking 0 sig line or failing and going lower. Today we got the upside confirmation with a really positive day today, which was good, almost a percent higher as I just mentioned. Now we want to see it going higher and breaking this high that we put in last week. We want to see that. It's going to be critical next week on this week, so we're going to have to see what it comes out. We have some important economic data coming out, GDP, and next week we have non-farm payrolls. That's going to be critical. So again, we're looking for a break of this high here. We're looking for the 1363 level to the upside, and the downside we're waiting for the 1320, which is the 0 sig line right now. If we look at the SPY, here we have the weekly chart right now. It's turning around so far. We opened lower, but then came higher, so far so good. We want to see a break to the 36 level, which is also the 0 sig line here on the weekly chart for SPY. That's going to be critical. Break that 0 sig line here on the weekly chart. Also break the 136 level that we just talked about on the daily. We're going to see it here more clearly. The 136 level, the positive 2 sigma, also the around the highs of last week here. The 136.34 was around the high, so we're going to break that. And that would be pretty positive for the market if we do break those two levels, which is the two zones at the same time, which is the high of last week and the 0 sig line on the weekly chart. So far that's what we get here. On the upside we're looking for 36.35 and then 38.40. Those are the two levels. And on the bottom we're looking at the 0 sig line at 132.30. That's the 0 sig line, which changes the bias to the downside here on the daily chart. For the intraday action here on the SPY, we can see we opened. We started going higher immediately. We got good numbers from housing data, and then the market rallied. Basically, then we were pretty tight range, made a couple of new highs throughout the day, but the range was pretty tight. Then sold off a little, rallied, made new highs, and then sell off into the close. Pretty good day overall so far, so that's pretty good for the market overall. Now looking here at GLD. This is the daily chart for GLD here with basically a flat day, but we were selling off in the morning. So here we spiked higher, making a really small hammer. You can see here the bars are pretty small right now, making some consolidation around this 152, 153 level. We're gonna see what happens, how it turns out to play. Maybe we're seeing here some kind of bear flag here. You can see here the pole now coming higher. We're still looking for going to the 149 level, 148 to test that triple low that we have here. Again, breaking that will take us to the 144 level, 145. But first we need to break this 148 level. To the upside, we have some resistance at 155.50. That would be our 0 sig line on the daily chart, important level here. Again, as you can see, CI flat and CI dip also flat. Looking at the weekly chart here for gold, we just turned on green, which is positive here, but again, we're basically failing at 0 sig line now a couple of times here. So it's important to watch the 0 sig line, which is at 159.66 for the weekly chart. Again, as we're talking about here, the 143, 144 level, after breaking this triple or quadruple bottom we have here on the weekly chart, you can see this quadruple bottom on the chart. For the weekly chart, if we get there, it's going to be pretty hard to hold. We have one here, 2, 3, and 4. Now we're going to see what happens here. We're able to get there to a 148 level. So those are the levels for GLD. For the VIX chart, here we have pretty flat range for the VIX today, down 1% again. Not 19.50 right now, again lower than the 20 we like to see, so pretty much good on the VIX so far here on the daily chart. Weekly chart for the VIX is positive at the 0 sig line. We would like to see a break here on the 0 sig line to the bottom on the weekly chart. We have 2 more days here. 0 sig line right now at 18.84, breaking that would be pretty good. So you can see here, last time we broke 0 sig here was and closed below next week, so here we broke it, but we want to see something more like this, breaking it and going lower and lower, maybe going to the 15 level, so break here and go to this 15 level. That would be pretty good for the market overall, but that's going to rule economic data, GDP, and non-farm next week also, so that's going to be critical here on the chart. Okay, for the McClellan oscillator, right now we're 138.7. Let me see if that's the settlement data. Yeah, 138.7, pretty high, almost at 150, pretty overbought here. So we have to be cautious here on the upside, what's going to be critical from here. On the number of 52-week highs and 52-week lows for the S&P 500, we got 11 here. Pretty good number here, and only one new 52-week low. Going back to the market rallying again, getting new 52-week highs, good again. That's gonna be pretty much it for the charts today. We have a special offer by TradeStation. Get your Hemsley Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great day. I'll talk to you tomorrow.